Thank you for tuning in and welcome back, team. In today's episode of Real Estate Investing, we'll continue with our 8th part and final part of our Real Estate Investing Guide series with exit strategies. In today's episode, we'll review 6 different ways that you can exit your real estate investing career, including the traditional selling with a real estate agent, selling for sale by owner, selling with seller financing, using lease options, 1031 exchanges, and avoiding taxes on a sale or mitigating them, if you will, and what your next steps are to get going with your real estate career. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. For reference, I upload 6 days a week, so you might want to check out some of the other that I make and see what you can take away from those to help you along with your real estate investing career. Okay, team, so let's take a look at this. Let's go ahead and really break this down. Today's like kind of bittersweet because it's the last part of this 8-part series, and I've enjoyed making this series for you. And it's going to be coming kind of as a high to you in your real estate career when you get to this point too, because it's going to be your exit strategy. Another way, it's liquidating your assets and go ahead and cashing that in to use your money with whatever you want, or to continue however you see fit with your real estate investing career. So let's go ahead and lead in with the first one, which is traditional selling with a real estate agent. Obviously, you're going to have built a team by now in your real estate investing career. You've identified your real estate agent that was helping you buy the property. You've identified your niches, obviously. You've identified your insurance people, your handyman people, your renovation folk, and you've got all of this stuff ready to go. So one place that you can start is with your real estate trusted real estate advisor that you began working with early on. Now, if they're not in business anymore, if they've actually retired themselves, then you might have need to find a new one. And if you find a new one, then just keep in mind like the 80-20 principle. It's kind of like, 20% of people do 80% of the work, right? It's the same thing in real estate. It might be more like a 95-5 principle in real estate, to be honest with you. So make sure that you're working with a great agent. And if you're in the position right now where you're looking at exiting your real estate investing career and you need help finding a top agent, just let me know. I'm happy to help you out. So then the next thing that you would have, obviously, is you would sign a listing agreement with that traditional agent, with that trusted real estate advisor. They will perform a comparative market analysis on your property, let you know roughly how much it's worth on an estimated fair market basis, and then you and the listing agent would have a conversation about what to list for and the strategies that take to get it sold. So obviously, listing with a trusted real estate advisor is going to be a little bit more expensive than if you were selling it yourself, or maybe not. Depends. We'll get to that in a moment. So the part of the listing commission is going to be the cost of the sale. You might actually be able to write off some of that, so you want to talk to your tax professional and see how that's going to work out for you at the end of the day. Now, whenever you get ready to sell a home, there are things that you need to be prepared for, whether it's investment property or a traditional property. You need to focus on getting your curb appeal up to snuff. You need to make sure the appropriate renovations are done, that it's going to appeal to the majority of buyers in the real estate market that you're selling in, right? And one of the things that you might want to consider is staging. Now, if you don't want to pay the all-out expenses of a traditional staging, it's okay. There's a site called patstyler.com that I'll go ahead and put up on the screen right now so you can see what they do. What they do is they offer virtual staging services. So whenever you get your professional listing photography done, you can actually submit it over to them, pay them an additional fee, of course, to go ahead and virtually stage a property. It'll make it look beautiful in the mind's eye of a buyer and help you drive a multiple bid on that property if at all possible. At a minimum, it'll definitely help you sell quicker, and normally sell for a little bit more money by having that done. So then after you get the contract accepted, once you accept a buyer's contract, then you're gonna move forward to the closing process and go ahead and liquidate that asset. Now, if you got to rinse and repeat this 100 times, then you're going to want to work very closely with your trusted real estate advisor to make sure that all the properties are being liquidated at the time of your choosing. That's going to benefit your tax situation. So that's where working very close in concert with your trusted real estate advisor, your tax professional, and attorney, if necessary, will help you determine what is the best timing to sell your portfolio. Some people have a portfolio of 3 properties. Some people have a portfolio of 30. Some people have a portfolio of 300 or maybe 3,000 properties. So timing is of the essence, and timing is everything to help you mitigate your tax liabilities on that property. And also, maybe you should take a loss on one, maybe you should profit on most of them, but maybe a loss here or there isn't the worst case. By talking to your tax professional, you'll know what the best case is for you and what the tactics are that you should use when it comes time to liquidate your portfolio. Now, the second option, of course, is selling for sale by owner. Now, there's definitely pros and cons of selling for sale by owner. Now, Now, selling for sale by owner will save you the listing commission, obviously, right? Which is going to save you roughly 6 to 8%, maybe, if we use it as a fictitious example of 6 to 8% listing commission. So again, it's whatever you negotiate with that listing agent. At the same time, whenever people look at selling for sale by owner, sometimes it seems sexier than it really is. The National Association of Realtors actually reports that of all the for sale by owners out there, only about 3 to 6% of them actually sell themselves, and when they do, they're generally selling for anywhere between 15% and 20% less than they would have had they hired a trusted real estate advisor to assist them. So if it was going to cost you, like, I mean, let's just use a really easy number that's completely crazy, and let's use that number of 10%. If it cost you 10% to list with an agent, worst case scenario, assuming that you paid all the listing commission, you paid all of your fees to sell your property, and let's say that you had to pay the buyer closing costs. That's the only way that we're going to be able to make it into that 9 or 10% cost to sell percentage. But let's say that you paid all of that, right? Then you still made more money than selling it as a for sale by owner in most cases. So it's something to think about, something to consider when the time comes due for you to go ahead and perform that exit strategy. Now, there's another great option that you could use actually on roofstock.com. Roofstock.com, you can actually put your property up there and let them handle the sale of the property for you and actually help you procure the buyer. It's available in many states, in many of the states across the United States. Go ahead and check them out. I'll provide the link down below if you want to use their services. Go ahead and hook it up. And just so you know, with both Pad Styler and Roofstock, they're partners of the Andrew Finney team. So if you use their services, we'll receive a small commission on the services. It doesn't cost you anything extra. It means the world of difference to us and helps me continue making these great videos to help you and help other families and people out there looking at real estate investing or buying and selling homes in general. So really appreciate your support. Thank you. Okay, so then let's move on to another thing that you have. The third option that you have is actually using seller financing. Now, seller financing is pretty interesting because there's a few different ways that you could go about this. So one of the ways with the use seller financing, it's also sometimes called carrying a contract. If you've heard that term, that's what they're talking about. So what happens is it takes place when an owner sells a property to a buyer, but they carry the mortgage rather than requiring the buyer to get their own mortgage. Normally, why an investor would choose to do this is because a buyer may not have the credit score needed. They may not have their ducks in a row. Maybe they had a recent bankruptcy. Maybe they had a recent foreclosure or short sale on their record, and they can't qualify for financing. So if you own your home free and clear, it becomes an opportunity for you to be able to provide seller financing or essentially carry the contract, if you will. Now, if you do that, I will strongly encourage you to use the services of not only a trusted real estate advisor to help you out, but also an attorney to make sure that the contracts are ironclad and tight for you. So it gives you an opportunity to make sure that you're protecting your best interest and that you don't get hosed on that deal. So again, why would an investor use seller financing? Well, it's normally done because buyers just typically don't qualify for a normal mortgage. The current lending atmosphere can make it tough for many buyers to obtain traditional financing, and they may not be able to document all of their income if they're self-employed, or they may have blemishes on their credit report, or perhaps they get paid cash or what have you, and they don't have a really good way of sourcing their income from the perspective of what a lender needs to issue a loan pre-approval letter. Now, when you are using it, like the how-to of seller financing is when you are offering it, you want to make sure that you're requiring a large non-refundable down payment to protect you up front and protect your interest and prevent them against the likelihood of them stopping their monthly payments. So it's something for you to think about how big of amount that should be. It's something that you should really consider, and also take a look at what your market norms are for seller financing and how much you should be requiring from the buyer up front. Now, if the buyer doesn't have the cash, they don't have the credit score, and they do have the blemishes on their credit report, they're probably not the person you want to be working with to sell your property to. You want the people that are on board, that are logical thinking and know what they're doing, and they have the money saved up, but they just couldn't qualify for a traditional mortgage. Something to think about there. So who can use seller financing? Again, it's best if you use this if you're using seller financing if you own the property free and clear. In other words, that you don't owe anything on it and you are the bank. Because if you still have a mortgage on the property and you offer seller financing to a prospective buyer, there's a clause normally in the fine print of a mortgage contract called due on sale clause that the bank could call due, and if so, it could put you in a very difficult position. So you want to review that contract that you have with your mortgage lender, and you also want to review it with your attorney if this is something that you're considering and something that you're thinking about, to make sure the due on sale clause isn't initiated against you. So when we're talking about the risk of seller financing, the largest risk of seller financing is obviously having your buyer stop making payments. I mean, that's pretty much the big one, because at that point, then you essentially need to go into being the bank and foreclose on that buyer to get them out so you can sell it to somebody that is going to make the payments, or perhaps just use a traditional mortgage to go ahead and get that sold. So if you have to foreclose, it's going to take time and money on your part. it's also going to have different requirements by the law that depending on your state of how that works. So each state is different, but you'll probably need to hire an attorney to get through the process correctly and make sure everything is done complete, and at the end of the day you can get them out. So I mean, while the risk of having to foreclose can't be completely avoided, it is one of your options if you want to liquidate your asset in that. Now if we go into the fourth type is like a lease option. So whereas seller financing, you're playing the bank and you're essentially giving somebody the loan based upon again, ideally owning the property free and clear, and you're essentially working it out between you and the buyer. A lease option is a little bit different. Now it's almost like, you know, when you hear lease options, it's also called like rent to own. Then there's different options, and they come with 3 advantages and they come with 3 disadvantages that I'll name in this video, and I'll also give you an example of a real world situation so that you can see kind of how it works out in practice. Okay, so when we're talking about a lease option, it's just like any other rental lease, except that the tenant moves into the home and makes monthly rent payments with a little bit higher of an amount, so that they're applying that towards their down payment on the property to be able to purchase it from you. Normally there are preset times that maybe you're saying, okay, I'll give you this lease option, but within 2 years you got to be able to get a full mortgage and buy the house from me. If not, then the deal's void and you need to be gone at the end of the 2 years, or maybe you decide just to keep it as a rental property. Now obviously this video is about exit strategies, so the assumption here is that you'd be selling the property and go ahead and liquidating your asset. So the option is this option is actually a legal agreement that gives the tenant the legal right to buy the home at a predetermined price and a predetermined length of time. So the option makes it illegal for the landlord to sell the property to any other investor during the predetermined time period. So even if you have a lease option in effect, that means that even though you kind of have a tenant in there, you can't sell it off to another investor. You can't sell it off to another buyer. You can't sell it off during the lease option period. So if that period's 2 years, 3 years, 4 years, or whatever you decide to do, you can't sell it to anybody other than that tenant that you have agreed to sell it to during the predetermined length of the contract that you and the tenant had agreed. So let's give you an example of how this works. Let's say that you have a couple of people that want to buy a house from you, right? And they lack a down payment and they lack the credit requirements to get a loan for themselves. Okay, typical situation here, right? So let's say that you have a mortgage on the property yourself and you can't carry the contract, so no seller financing here, and so as opposed to that, you go into a lease option. So you do a thorough background check on the prospective buyers and you decide that they'd be good candidates for this option. So then you guys agree to a lease agreement with an option agreement, which gives them the right to buy the house for, let's say, $100,000 at any time in the next 2 years. And the buyers will put up 5% of the price as an option fee whenever they move in. Now the option fee is generally non-refundable. So they put up 5%, that's $5,000 that you're getting and that you're guaranteed that you do not have to repay. Now again, you'll want to work with an attorney on those lease option contracts to make sure that you're protecting yourself in this situation. So let's kind of break down that example that we just gave. So now let's say that since the buyers weren't able to get traditional financing, they will have to qualify to get traditional financing in the next 2 years. They may not qualify today, but in 2 years time, they have to be able to get a traditional mortgage to buy the property from you, right, in the next 2 years. And the $5,000 option fee will apply towards their down payment, even though you get to keep it if they default, right? So now let's say the buyers don't want to buy the house and they leave within the first 2 years or at the 2-year point. The $5,000 again is not refundable. You get to keep that money. It's all yours to do what you decide what you want to do, and then you can decide how you want to sell your property moving forward. Now if the buyers after 2 years cannot get a traditional mortgage, you can sign another option agreement with them, or you can decide just to flat out rent it to them, or you can actually get them out of the house altogether, and you can possibly increase the purchase price too. So I mean, there's 3 different things we're talking about there. You go back into your renting position as opposed to the assumption that I'm making in this video that you want to sell, or you go into allowing them to have another lease option, and the lease option that you would, since this would be now a second lease option to the first one now, right? The first one's off the table since they didn't make good on it, and you're saying I'll give you a second lease option. You want to reassess the property value in that current market to see whether the home should be selling for more. If so, then you can go ahead and raise the price on the second lease option after the first one has expired. So let's go ahead and give you the 3 advantages of a lease option strategy. The first one obviously is a great short-term exit strategy for a slow real estate market. So if you're in like a normalized market, or if you're in a strong buyer's market or something, it might give you an opportunity to get a short-term exit strategy going. Go ahead and sell the property, have it locked out, and boom, there you go, right? The second one is the lease option tenants will usually take better care of your property because their thought process is that once this lease option expires, we're going to be buying this house ourselves. So then you get more of a pride of ownership, if you will, from the prospective tenants in general, it's not every case is going to be different, but most people's mindset are going to be that this is going to be my house, so I'm going to take care of it and I'm going to love it, right? The third one is there's no real estate commission required. It saves you that money because you work directly with the prospective buyer. The only time that you might have the pay a real estate commission is if you open it up to the multiple listing service, you open it up to real estate professionals to assist you with procuring the buyer or tenant, right? Then you'll need to pay them and go ahead and take care of them to provide that service for you, right? Then the three disadvantages that you look at a lease option strategy is that dreaded due on sale clause from the bank. So it's like, even though technically no sale really took place just yet, it's kind of a cloudy area. So I strongly encourage you to talk to a real estate attorney if this is something that you're considering with your property and you have a mortgage on that property. We want to make sure that you don't get hurt there, okay? The second one is that you can't sell the property to anyone else. As we've already outlined, if you lock in a lease option with a prospective buyer / tenant, right, then you can't sell that property to anyone else for that predetermined time that they have to make good on the contract to be able to purchase that property. So again, if that's 2 years, then the assumption is there that they're going to be qualifying for financing within the first 2 years, and they're going to be buying that house from you once they're able to get a traditional mortgage. You can't, as a seller, sell it to anyone else during that predetermined time. So think about it. Think about that, okay? Really make sure that's something that you want to do. It's also probably pretty important to let you know that you could be sued. It's kind of interesting this way. Let's say that the prospective buyer / tenant didn't exercise their right, and 2 years came and went. Now, they thought that they were going to be the homeowner, and they might say, well, I have equity in the property. I want my equity out of the property. Well, how does a tenant say they get equity stake in a property even with a lease option? They can't. But if they sue you, right, then you're still going to have the legal fees that go along with that, even though it's a baseless claim. So you need to be careful about that and really think through the lease option. There's sometimes, again, one of those things that sound kind of sexy, but they're not always sexy, but done correctly, they do work. And people do them every single day of the week across our United States. So one final thought on lease options. It's important to note before you get into this that very few of the people that exercise a lease option from the buyer / tenant perspective will actually buy the property. That's the reality. Very will ever actually make good on exercising their right to buy the property. So just know that going in. Now, what has happened, and I don't agree with this, and I know that as I've mentioned during the series, this whole entire series is being inspired by the Bigger Pockets, biggerpockets.com, their contact information, their YouTube channel, and their website's also listed down below in the show more description. Definitely want to check them out. They're awesome people. So having said that, on the Andrew Finney team, I personally, Andrew Finney, and the Bigger Pockets, and a lot of other reputable people do not agree with unscrupulous investors taking advantage of people for greed and taking advantage of people for profit just to get money. Because what happens is since they know that the statistics are unlikely that the person will buy the property, then they exercise that lease option amount of money, that option fee up front that's non-refundable. They bank on the fact that they're not going to, that the buyer tenant people are not going to buy that property, and they keep that money. They rinse and repeat the cycle over and over again, and they make it increasingly difficult. They might just say, okay, if they have a credit score of 400, a ridiculously low credit score, right, then they're not going to be able to buy the house in the next 18, 24 months. And they know that. So they say, oh, but they have $10,000, and I'm going to say, hey, I'll give you my $200,000 house for $10K up front, and you're going to pay, whatever the going rate is for a mortgage every single month, plus $200 that will apply towards your down payment, right? And then they know that they're going to default, and they keep that money, which leaves those people in a worse position prior to the entire lease option thing too. Don't do that. That's wrong. It's not ethical. It's just wrong, and you're hurting people if you do that. So please don't do that, and just keep in mind, I definitely don't condone that. Now, if a lease option is right for you, that's up to you to decide, but don't get unscrupulous and don't take advantage of other people, okay? That's not cool. You wouldn't want it done to you. So then your fifth option is actually reviewing your 1031 exchanges, which are going to help you avoid or mitigate your taxes on the sale of the property. It is a very legal thing to do, and the people that you want to discuss this option with is your certified public accountant, your tax professional, and your financial strategist, possibly an attorney, a tax attorney, right? You want to discuss that, especially depending on how large your portfolio is, how to use it, how to maintain compliance so that you can defer it. In short, a 1031 exchange is almost like Uncle Sam's way of kind of partnering with you on your investment goals and giving you the opportunity to defer taxes if you use this option. So it is an option that a lot of investors use. And in fact, a lot of people here in Las Vegas and Nevada, we do see a lot of people from out of state where real estate is more expensive, like New York, California, Florida, where have you, and they move here and they're exercising 1031 exchange options to defer taxes on the profit portion of the sale of their property in the state that just came from. So it is quite common that people do this. Now, it's just something to think about, something to consider there. So guess what? That brings us to a close on this video. It really does. And it's been a lot of fun making this for you. So your next steps are to know with 110%, if you watched every video in this series and you took it to heart and you performed the exercises, you're now ready to go out and begin your real estate career, and with a good foresight of what to expect all the way through. During this series, we've covered 8 different episodes. I mean, we began with how to invest in real estate. To the second one, we talked about getting a real estate investing education. The third one, we were talking about choosing your investment niches and strategies. The fourth episode, we went over how to create your real estate business plan. The fifth one, we talked about how to find real estate investment properties. In the 6th episode, we talked about financing options for your real estate investments. In the 7th episode, we talked about marketing. And now in today's final episode of this series, we're talking about your exit strategies. Now you're fully prepared. Now go out, start your real estate career with confidence in knowing that you have properly educated yourself. Take advantage of the tools that I've listed throughout this series. Go on the Bigger Pockets. If you haven't already subscribed to them, subscribe to them. If you haven't joined their newsletter yet, join it, get involved in their community, and learn from other investors that are going through the same thing that you are right now so that you can help them. No, they're not paying me to say that. It's just I really enjoy their content that much, and that I took so much from their website and just learning over the last few years of different things that I just felt compelled and inspired to make this series for you and give them their props that they're due. They've been at this for a long time, and they're really, really darn good, and they can help you succeed. So go ahead and check them out, okay? Now, if you have any questions about this video, I'm going to go ahead and pop up my contact information, and I would love to hear from you, learn to hear where you're at in your real estate investing career and how this series has benefited you. Now, if you tell me what you really took away from it. I'm going to open up the floor here. It's your turn. Tell me in the comment section below what you're thinking about this episode and what you thought about the series altogether and what you would like to see next on the real estate investing portion of my channel. I will get to work on making those videos for you. So now, if you haven't already done so, of course, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. And number 3, please share this video around with someone you know that's going to be able to help. Because just like you right now, I'm sure you know another would-be investor, somebody that wants to get started in real estate investing, that just needs to be pointed in the right direction. Please share this series with them. It'll really help them out, just as it's helped you. Now, in between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for sticking out with me, team. Enjoy a wonderful day.